launching an impact investment fund and a couple of projects which are fairly advanced. So
hello.
Oh, cool. Nice.
Hi, Dennis.
Hi,
Hello, how are you?
Oh, good. How things on your side?
All fine.
Everything's going very, very well. I'm here in Chicago.
Oh, nice. How is Chicago?
Okay.
It's getting better.
So I'm just.
Well, I was a PhD student at the University of Chicago, so I
great university, that's for sure. That Northwestern and Kellogg are all top-notch universities down here.
Yep, definitely.
So that's great. So we are starting the panel discussion, family office focus, private equity, direct investing over hedge fund investment. We have the moderator, Dennis O'Neill, CEO, O'Neill Capital Advisors, Chicago. Then we have Fabio Scacciavillani. He's a partner, EMINTAD, Golden Eagle Capital, based out of Dubai. Then we have Gavin, Lashley, UK, founder, chief investment officer, GSL, based out of UK. Go ahead, Dennis, take it over.
All right, it's a pleasure to meet you, gentlemen. Welcome to the panel discussion for Family Office Focus on private equity and direct investing over hedge fund investing. I think, why don't we start it off with just your overall thoughts on private equity and venture capital investments coming from family offices.
Do you want me to start? I'll break the ice. Okay.
Yeah, whoever wants to take the ball and run with it.
No, the private equity, I think, is one of the best areas where family office can invest because it can be adapted to their risk appetite and to their internal skills. So it's a very wide sector, which often includes things like real estate or hotels. So things that are relatively easy to understand, although sometimes they might be deceptively easy. And you can leverage the long-term focus that family office have compared to private equity funds, which have a deadline and need to cash in within a few years. So the family offices can, in a nutshell, take advantage of the liquidity premium and be also an element of strength for the companies where they invest, because they can provide networking, they can provide experience, they can access banks, financial institutions, and all other people with specific knowledge and specific skills in the field where the company operates in. So I would always just advise against the absentee landlord approach. Private equity is not a game, and is not a spectator game. In order to really make money in private equity, you need to bring something in the company where you invest. You need to be able to steer it in a certain direction. You need to be able to add value. Just sitting back and watching what's going on in a relaxed mood is not the right attitude.
I noticed that you've referenced mostly private equity, but I mean, for real estate, we'll circle back around with that here in a little bit, because I want to drill down a little bit of what you're saying as far as the activity level. going into private and public companies with private equity or private companies mostly. But why don't we get a take from Gavin, and we'll go on a little bit.
So yeah, I kind of like mirror Fabio's thoughts. Generally speaking, you kind of like need to, from my experience anyway, I currently, within my kind of like funds, I kind of have a venture capital fund and a private equity fund, both solely focused on like kind of like blockchain companies, right? Where kind of like my venture capital fund invests into protocol layer solutions, which are more kind of like infant layer token economies, whilst my private equity fund mainly invests into application layer solutions, so which is more about commercial applications of blockchain. Typically, you need, for those two funds, right, you need to provide value-added services in order to obtain equity capital growth for your investment, right? And so, for example, in the VC fund, we provide compliance and legal help, which will add value to their kind of overall organization, because generally speaking, typically speaking, the VC fund investments are kind of like early stage compared to the private equity funds, which are more about kind of like the commercialization of their solutions and kind of like how can you actually monetize their blockchain solutions. But with the VC approach, it's kind of like, how do you actually create the right foundations? And I guess it's you need to, in order to obtain equity capital growth, is providing those value-added services and kind of like putting your portfolio companies in the right direction in order to kind of like in order to see a good return on your investment. Those are my thoughts anyway.
Okay, well, thank you so much. Yeah, those are great comments. I'd like to drill down a little bit on the area of the market outside of real estate, just on the private equity or direct investing side. If what sectors of the market are as far as investing in companies that do you think are very appealing for family offices now, and what stage of company is it? Startup? Is it growth stage? More mature private equity or venture capital investments being made?
I think you can find opportunities along the entire spectrum of dimension and risk. I would start from a self-assessment of internal capabilities. In other words, you need to ask whether you have the right skills to select investments and to bring value added in the companies where you take where you acquire a stake, because that's the ultimately the main criterion for choice. I mean, it might be that, I don't know, artificial intelligence is great and it's like the thriving sector. But if you don't have internal skills to evaluate whether the proposed investment is a hoax or is like the next big thing, just don't risk your money in something you don't know. That's my advice. If you think that a certain sector might represent the next big thing, then you need to invest in human capital that can guide you through through the investment choices, the investment selection. You need, resources need to be taken on board before you can optimally invest in the opportunities that are presented to you.
Well, thank you so much, Fab. Oh, did you have more?
No. Just this is and it's an advice which applies to venture capital, private equity,
basically,
real estate.
So basically, stick to what you know. Where you have expertise and resources and contacts, and those are the sectors of the market that they're most active in. And each family office has their own different skill set. Correct?
Absolutely. There are some who co-invest. In other words, they think they can scrounge somebody else to do
for
the hard
sure.
work.
Yeah, I see that.
That might work in some situation. I wouldn't advise to make it a rule, because the alignment of interest might not be as solid as
clear
you.
cut. Yes, clear cut as it
Exactly.
seems.
So,
Yeah. All right. Well, thank you so much, Fabio. Gavin, you want to chime in here and give us your insight?
So yeah, like pretty much mirrors Fabio's, but I think we kind of like need to, as I've never encountered a family office, but I think probably like if you don't understand a particular sector, I think it's probably better if you were to kind of like get acquainted with that sector, and to kind of like really understand the market dynamics and to see where the real value is in that sector, and that will ultimately inform you of where to understanding the market, you'll be able to kind of like allocate more capital more effectively, and like identify where the value is, and kind of like divert resources towards that, therefore kind of like getting a better return on your investment, really. So that's just kind of like my two pennies worth.
Yeah, Gavin, I was going to ask you, I mean, the LPs that invested into your funds, none of them were family offices?
Oh, no, so it's mainly my own assets.
Okay.
So just for background.
that's an easy way to raise money.
So just for background, I got into Bitcoin in 2013, and I'm only 24, right? So
oh, wow.
kind of allowed, so that like having those assets allow me to kind of like not go down the traditional finance path, and kind of like create my own flow. But having Asperger's, I've been trading since I was 11. Kind of like managing my own portfolio, typically equities, bonds, and kind of like commodities. But kind of like made the switch to crypto full time due to the kind of like the best returns you can have, really, isn't it?
Sure, there's no doubt.
So I haven't really I haven't really encountered that many family offices in my time, so it's mainly my own assets. But having said that, I think I'm kind of like solely focused on blockchain, but I'm a huge believer on the convergence of technologies, kind of like how IoT interacts with AI. That's my grandfather. I'm at my grandparents' house in Sri Lanka.
Let me just. I just want to have one quick thing. Fabio, can you chime in? I mean, have you seen any family offices that are interested in blockchain and cryptocurrencies, or have you come across that?
There are a lot of family offices that manifest an interest in this. I know one that is really keen. I mean, they're real enthusiasts.
Sure.
And we're talking about a family, an Italian family with deep pockets. So they have put money into various ventures, new initiatives. They're always active in all the networks, in gatherings of crypto in the crypto sphere. So definitely yes, but I see that very few family offices have invested in the human resources to really make sensible investment decisions. To my knowledge, the ones that I deal with more often are traditional family office. know, the most exotic thing they've tried is to invest in cannabis. Yeah. So that has been something.
Yeah, I mean, the one thing I noticed that through my travels is that the family offices that are very active in crypto and blockchain typically are the next generation of the people that are going to take over the current generation, and they seem to be more keen on these more cutting edge new technologies and things of that sort, and it's a way for the people running the family office now, for them to be able to keep the children involved, because a lot of them are checking out and they're not so interested in making money as social impact and being on the cutting edge of something, instead of the daily grind of making returns.
No, that's true. I mean, it's they sometimes the attitude, okay, let's give let's give Junior a little bit of money to play around.
Yeah, true.
So if he loses his tough luck, he'll better keep him engaged with blockchain than having him follow some some less
nefarious path.
Exactly.
Yeah.
So,
okay. Well,
but sometimes you find people who are really, who really know what they're doing. It's a minority, and I would say that it's. You always have to keep in mind this 80-20 split. So 20% of people really know what they're doing. 80% just they're just followers or
true.
Casual enthusiasts.
Sounds good. Let me ask another question. Obviously, from your investment past, or Gavin, of what you're doing now, of obviously that investing, utilizing private equity, or basically it's best to say direct investing from family offices, opposed to over a hedge fund investment. I guess Gavin, we'll start off with you on this one. Do you? Obviously, you've created your own wealth that you're managing now. Have you made direct investments into companies, or have you invested in hedge funds in the past?
So speaking, I've created my own kind of like fund in Luxembourg, but I've made so within the sub funds of that within that GP, I have a quant fund which trades the volatility of crypto, 2 index funds which track the validation nodes and kind of like DeFi, and then a discretionary fund to invest into ICOs, IEOs. But then my VC and private equity fund is primarily makes direct investments into blockchain companies, whether that equity or kind of or promissory notes. So kind of like how I kind of mitigate my risk is I build technology as well as managing my own, as well as having a fund really. I build my own technology too. So one of my kind of like risk management tools is my token standard called the milestone-based investment, which allows for incremental release of funds based on predetermined milestones set in the white paper or business plan. This kind of like reduces counterparty risk in investment, because not all the capital is exposed to the project. Capital is released in milestones, which are kind of like audited and kind of like budgeted. So I don't really kind of like mitigate my risk that way. Also, kind of like we were touching on kind of like the value-added services as well. Kind of like where I see value and how I kind of like reduce my risk on investment is I haven't launched my company yet, but I have kind of like portfolio companies that I'm kind of like advising. But kind of like how I kind of provide value-added services to these portfolio companies is kind of like the MBI token standard charges a 5% fee for the verification of milestones for the entire capital raise, and I kind of like sign exclusivity agreements with my portfolio companies to kind of like ensure that their their entire capital raise is via the MBI process. So my initial investment into the project is less than the kind of MBIfication amount, and then I also provide it's kind of like a waterfall effect where I kind of like provide marketing services, technical support, and all that kind of value-added support, and like compliance and legal services in order to kind of like reduce the risk on my investment, as well as add value to my portfolio companies. Do you kind of like, can you see that, guys?
Oh yeah. No. I'm my background's 25 years of investment banking over experience, so I understand every single aspect of it. A lot of people are going to milestones now because nobody wants to give all the money up front and then find out what they've done with it. It's you usually want to target. You want to have milestones to make sure things are moving forward with before you solve the capital. But that was great. Here, let me go on to Fabio. Fabio, do you want to chime in on this as far as direct investing over hedge fund investing, or I would say any other managed product investing? Because I know that most family offices do still put a bit of money in funds, but I know that the whole reason of being a family office is to control your own investment to a certain extent. So want to give us your insight?
Yeah, well, when you say direct investment, you mean direct investment in hedge fund strategies?
No. Direct investment into an individual company opposed to into a fund.
Okay. No,
okay.
But because I mean, a hedge fund is different from a private equity fund, so that's why I wasn't.
Oh yeah.
Sure what
but I mean,
you meant.
but at the end of the day, it's managed money is a little. I mean, they manage money, differently and more aggressively depending on what fund you're in. But allowing other people to manage your money opposed to managing it directly. I would just say that basically, well, how much are you seeing going directly into companies versus individual companies versus like a hedge fund or some type of like-kind product of hedge funds?
I don't know. It's two different kind of risk. If I have to classify investment by their risk profile, a hedge fund has. By the way, a hedge fund can have a host of strategies.
No doubt.
So
There's 100 different versions of hedge funds. That's for sure.
So a global macro, actually, two global macro funds can have opposite positions, and still called global macro. The same for FX funds. No, so in terms of risk, how I see things is that a hedge fund is a highly risky investment. A private equity fund, direct investment in a non-listed company is a lower risk investment. And at the end of the day, my advice would be invest directly where you have skills and delegate investment where you have skills, or for those geographical areas that are too far away and you deem to be attractive in the medium run. So you might buy into, I don't know, a fund that invests in Brazilian companies or in Far East logistic infrastructure. They're much more likely, if you know them, if they have a track record, if they are a reputable individual, they have a much better chance of succeeding than you trying to manage, I don't know, from New York infrastructure in Papua New Guinea.
Yeah, no, I mean, it makes sense because it's, the family offices that I know, they are very, very focused on two areas. The areas of where that they've made a lot of money in directly themselves, or where they've created their fortune. And those two areas are, and then they ebb slowly out from there. But why don't I think we're getting down to the end of the time here. Why don't we have some closing comments from both of you, just overall insights into, private equity or venture capital directly into companies opposed to investing in a fund? Or what, something, just make your closing comments, whatever you want them to be.
Gavin, you want to go first?
No, Fabio, after you.
My final remark would be this: invest in what you know. First of all, if I were to give you a split of investment, I would put 60% into private equities, maybe 20% in listed equities / hedge fund, and 20% into venture capital, which is in practice a sort of it's exactly similar to
Exactly.
private equities, but you take higher risk because you invest in companies that are not so well established and need capital for their development, heavy lifting. I would tend to suggest to invest in companies that are close to break even. Don't put much money. Don't, $1 million is enough. And in any case, always try to have a direct control of what they do, either by appointing a CFO or being in the board, or otherwise, I don't know, teaming up with somebody else who can do that. Especially for younger companies, you need to keep them on a tight leash.
Very good. Thank you so much, Fabio. And Gavin, any closing comments?
Diversification is the name of the game, right? And if you're heavily exposed into hedge funds, it might be an opportunity to diversify out from hedge funds into private equity and VC, particularly if the profits of the hedge funds are doing nicely, and you could use that as an opportunity to have exposure to a different sector within the market. But it ultimately depends on your risk profile, really. Typically, VC funds, 90% of your portfolio of a VC fund's portfolio companies might ultimately fail, but it's that 10% that will generate the returns for you. It's a bit different in private equity because it's a bit lower risk, but I think it's imperative to have full exposure to these different sectors of funds, and to get I don't know, I'm a bit flustered, but if it's I think private equity is probably the safest bet you can have in terms of investments. But if you want to increase your risk, invest into maybe a VC fund. But if you want to have low to moderate risk, invest into a hedge fund with a sensible strategy. but if you want higher risk, invest into a fund with a more
I'm surprised you're not saying buy crypto.
I would assume that most people in the audience have bought crypto, but long Bitcoin.
I own some, that's for sure.
Long Bitcoin, short banks.
Yeah, no, that's treated me very well. I've spoken all over the world on blockchain and crypto too, so I know that world pretty well. But hey, it was so nice to meet both of you gentlemen. Hopefully our paths will cross again here in the future. And it's been great getting to know you and some great insights. It was I was happy to be able to moderate this.
Thank you.
Thank you,
Dennis, so much.
Dennis, all the best.
Thank you, Dennis. It was a great insight. Fabio, Gavin, all thank you. Thank you for coming here. Look forward again.
Bye.
Thank you. Thank you very much.
It's a pleasure for me.
Bye.
Thank you.
Pleasure. Thank you.
Bye.
Bye.
Bye.